What's the better stock to buy? Amazon or C3.ai? Those are two very different companies at very different scale. Amazon is a much more proven business with nearly over $500 billion in annual sales. C3.ai is an up and comer taking advantage of artificial intelligently infused products and taking advantage also of the popularity of OpenAI's ChatGPT. If you see here, what I have pulled up is the chart of this year's price changes for these two stocks, C3AI and Amazon. C3AI stock is up a whopping 116% so far in 2023. This is on the back of the popularity of generative AI and the fact that C3AI is launching its own product coming in March. And so a lot of enthusiasm, a lot of hype around that. And so a lot of investors are asking themselves, is it worth buying C3AI stock? Or maybe instead, should we buy something more proven like Amazon? So I'm going to answer that question in this video, looking at 4 different metrics. Let's get right into it. The first metric I wanted to look at is revenue growth. And you see here it's been fluctuating. C3AI was below Amazon's revenue growth initially, and then it surpassed Amazon for a couple of quarters, and now it's coming back down, and Amazon is ahead of C3AI in terms of revenue growth. In the upcoming quarter, C3AI is expected to deliver continued decreasing and perhaps even a year over year decrease in revenue growth. So it's been falling fast. It's going to take some time for that newly developed product, newly announced product in March to start generating sales and how that's going to go. So revenue growth in favor of Amazon right now. The next metric I wanted to look at is cash flow from operations. And looking at this metric, we see C3AI has only had maybe one, perhaps 2 quarters of positive cash flow from operations and trending downward in this metric, losing 53 million in cash flow from operations in its most recent quarter. Meanwhile, Amazon is delivering billions in cash flow from operations, and the trend is moving positively. In its most recent quarter, delivered 29 billion in cash flow from operations. So advantage to Amazon in this regard as well. The next metric I wanted to look at was operating profit margin going over the trailing 12 months, and both companies showing a downward trend line. However, C3AI, if we look at here, they went from negative 40% down to negative 92.33%, an absolutely atrocious operating margin. The company is just losing money all over the place. The more it makes, the more sales it makes, the more money it loses. I don't like these types of companies that are going in the wrong direction. But let's look at Amazon's operating profit margin, also trending downward, but at the very least it's still positive, and it's gone from a little over 6% operating profit margin in the trailing 12 months to about 2.4%. Amazon has historically operated on very, very thin operating profit margins, never had an operating profit margin over 10%, even though the company's achieved near over $500 billion in annual sales. However, comparing it to C3AI, its operating profit margin looks incredible because it's on 95. It's a big difference from negative 92% to positive 2.4%. So advantage to Amazon in this regard. Now, this isn't to say that in the longer run C3AI could achieve better operating margins. In fact, their business model um, could lead to better operating margin if they were to achieve that scale. However, they haven't proven that yet, and they haven't shown any evidence of achieving any kind of economies in scale. So I'm not going to give the company credit for something it hasn't achieved yet. I'm not going to recommend putting money to work in a company on just potential, right? I got to see some. I got to see more evidence to have more faith in the potential, right? So I haven't seen that yet with C3AI in terms of the operating margin. Finally, let's look at valuation. C3.ai trading at a price to sales of 9.595. That's way down from the peak of over 75, even though the company's stock price has surged over 100% in 2023 so far. Amazon's price to sales ratio is also down from the peak of over 5 down to 1.985, but significantly less expensive than C3.ai. And so if I'm looking at this in terms of a risk reward scenario, looking at which one of these stocks is the better buy, I'm going to say Amazon is the better stock to buy. Sure, it has lower upside than C3.ai does. However, it also has significantly lower risk. So balancing risk versus reward, I'm saying Amazon is the better stock to buy here. All right, thank you for tuning in to another one of these videos. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.